Good morning. Today I'm pleased to present the Government of Alberta's mid-year fiscal update and economic statement. As of the last fiscal update, we reported a significant rebound in Alberta's economic outlook, and today I'm pleased to report that our economic recovery is becoming more entrenched. Over the last 20 months, Alberta has weathered the most severe global health crisis since the Spanish flu, the most severe global economic contraction since the Great Depression, and the most severe energy crisis in the history of Alberta. Despite all of this, our province is showing its culture of perseverance. Albertans and Alberta businesses are becoming more innovative. They're adapting to the impacts of the pandemic and displaying an encouraging resiliency. Alberta's recovery plan, along with responsible fiscal management, is important in cementing our province's economic revival. Last February, when we released our budget, we were expecting the province's economy to grow by 4.8% in 2021. However, our recovery continues to far surpass those expectations. Alberta's economy, as measured by real GDP, is now forecast to grow by 6.1% this year. Despite the impact of the fourth wave, which caused national banks and other major forecasters to downgrade their economic outlooks for all jurisdictions across Canada, many still have Alberta leading the nation. The Conference Board of Canada's latest forecast, released just 2 weeks ago, has Alberta leading the country in 2022 as well. As we continue to position Alberta's business environment to be the most competitive, we're seeing a trend of game-changing new investments coming to the province. This month alone, we saw a string of historic investment announcements, including over $7 billion in just 1 week, that will help diversify our economy and create jobs. Amazon Web Services is investing billions in a new cloud computing operation in Calgary, which is the largest investment in the tech sector in our province's history. Plug and Play, a global tech accelerator and early-stage investor, is also setting up shop in Calgary, yet another show of confidence in Alberta's massive potential in this growing sector. In the MD of Greenview, just south of Grand Prairie, Northern Petrochemical is investing $2.5 billion and creating 4,000 jobs with a new carbon-neutral ammonia and methanol production facility. On top of this, our airline industry is expanding with Lynx Air, Canada's newest low-cost air carrier, planning to launch out of Calgary. And at the same time, WestJet and Flair Airlines are expanding and adding routes, further connecting Alberta to the world. The government's efforts to keep taxes low and make Alberta's economy the most competitive in North America is a key part of attracting new investments like these. In fact, corporate income tax revenue of $2.9 billion is forecast for 21-22, up $1 billion from what was forecasted in February's budget. Corporate income tax revenue is now expected to increase by an average of 19% each year over the next 2 years to reach $4.1 billion in 23-24. As I mentioned earlier, an essential part of our recovery plan is growing our natural resource sectors. And on that note, the energy sector continues to be among the most productive and highest paid industries in Canada. It helps drive growth and job creation in many other sectors, and the recovery in business output this year is largely driven by sharp rebounds in this sector. While we are today experiencing significant volatility in energy prices driven by concerns over the Omicron variant, we now expect West Texas intermediate prices to average just over $70 US per barrel this year. And our platform commitment to deliver on pipelines is coming to fruition. Enbridge's Line 3 replacement is now operational and will reach its capacity in the next few months. We're also seeing the Trans Mountain expansion on track for completion by the end of next year, and continued pipeline progress on Coastal GasLink, on the Nova Gas transmission line, Keyera Liquids line, and the Pembina Peace pipeline. Robust energy prices are boosting drilling activity, oil production, and energy exports, as well as manufacturing shipments of petroleum products and petrochemicals. Energy investment is recovering and will grow by an estimated 26%, reaching nearly $21 billion this year after the historic challenges of last year. Other sectors are also showing encouraging signs of growth. Industries such as agriculture, transportation, Manufacturing, tech, finance, insurance, and real estate are increasingly accounting for larger shares of our economy, adding to the diversification efforts. Non-energy investment will expand by 6.6% this year and grow by another 7% in 2022. Food manufacturing shipments were at record highs in September, and although drought conditions have weighed on agriculture, overall real exports are forecast to rise 6.7% this year. There are still more signs our economy is recovering. Unemployment will average 8.8% this year, which is down from our forecast at the last fiscal update and a significant improvement over our budget estimate of 10%. We're delivering on our promise to create jobs. Alberta has gained more than 103,000 jobs since the start of the year, an incredible achievement after the serious impacts COVID had on employment. Through programs like Alberta Jobs Now, the Building Skills for Jobs initiative, and the Alberta Advantage immigration strategy, we're also taking action to combat labour shortages, improve the employment participation rate, and ensure Alberta's workforce is ready to capitalize on all the new opportunities coming to our province. As the economy improves, so too is Alberta's bottom line. Alberta is now projecting a deficit of $5.8 billion for the 21-22 fiscal year. This is $2 billion less than the first quarter fiscal update and $12.4 billion less than the original estimate in Budget 2021. Almost all of Alberta's revenue sources are improving along with the economy, and at the same time, we're holding the line on spending. Total projected expense is higher than our last fiscal update, but this increase is largely due to drought relief measures. Since the February budget, the government has added a $1.4 billion provision for agriculture emergency assistance because of the worst drought in at least 20 years. In addition, as revenues have increased, some unavoidable costs of doing business in some areas have also risen. For example, higher oil prices mean the Department of Energy incurs higher costs to get oil to market. In the same vein, because the province is seeing high rates of return on its investments in the Alberta Heritage Trust Fund and other endowment funds, the investment management fees we're paying are also increasing. Overall, revenue is up $14.2 billion from the budget. This is an improvement of $2.9 billion from the last fiscal update. The province's income from non-renewable resource revenue accounts for the largest portion of this increase. However, revenue from income taxes also makes up a sizable part of the increase as Albertans have been getting back to work and their incomes are rising. While revenue continues to exceed expectations, we are keeping a steady hand on the wheel when it comes to spending. Over the past few years, we've made real progress in the effort to be fiscally responsible and accountable to taxpayers. And we've openly acknowledged the history in this province of spending excessively when the energy sector is booming. But this was never a sustainable practice. Oil prices are volatile, as we see today, and major fluctuations can be difficult to predict. It's a story that Albertans have been living for decades, but one most acutely lived in recent years. Amidst this ever-present volatility, the government maintains three fiscal anchors to guide decision-making. First, the government is living up to its commitment to keep Alberta's net debt well below 30% of its GDP. And I'm pleased to report that our ratio will be an estimated 19.2% as of March 31st, 2022, considerably stronger than our original projection and much lower than almost all other provinces. Keeping our net debt to GDP ratio healthy ensures a strong balance sheet and positions the province for fiscal recovery. Second, the government is committed to bringing our per capita cost of delivering government services in line with comparator provinces. This must be a primary focus if we're to get this province on a sustainable fiscal trajectory. And third, the government is still determined to balance the budget. We will set a clear time frame for getting back to balance once the pandemic is over and there's more clarity around the long-term global impacts. The events of the last few days around this new COVID variant reminds us that we're still in a period of great uncertainty and volatility. It reminds us that we need to focus on what we can manage, a focus on economic growth and holding the line on spending. In conclusion, The government's persistent focus on attracting new investment in a diverse range of sectors is paying dividends for all Albertans. Continuing to position the province for economic growth, along with responsible fiscal management, will help cement our province's economic and fiscal recovery and lead to a more stable and prosperous future. A future beneficial to all Albertans, a future of great opportunity. Thank you.
We are now going to go to media question and answer. You will have one question and one follow-up, either two off the top or one question and one follow-up following the response. We'll start with those in the room, and then we'll go to the phone. Just before you begin, if you don't mind identifying yourself with your name and outlet, that would be great. With that, we'll start with you at the mic.
Audrey Neveu from French CBC. Minister, do you see a future, mid or long term, where balancing the budget would not depend on non-renewable resources, especially given the investment in that sector right now in the province?
Well, right now, our energy sector is a vital part of our economy. Certainly, our non-renewable resource revenues are a key line in our income statement, an important line. And I've been transparent about this in the past. Right now, we're focusing on positioning the province for investment attraction, economic growth, expanded fiscal capacity. We're also focusing on ensuring we're delivering government services most efficiently and effectively. And again, I think our most important fiscal anchor that we identified is over time, carefully and thoughtfully bringing our cost per capita of delivering government services in line with comparator provinces. But I also know it's going to be important to take a look at our revenue structure. It will be important to ensure we have the most efficient and appropriate revenue structure going forward. And so that process will be upcoming. We will be appointing a panel. Again, once we're more clear of this pandemic and have additional economic certainty. And at that point in time, it will be a great discussion for Albertans. But in the short and intermediate term, non-renewable resource revenues will continue to be a key part of the revenue mix in this province. We have an incredibly robust energy sector, a sector that will be relevant for decades to come, and it will be part of the revenue mix.
Thank you. In Quebec, Premier François Legault said that he would put measures in place to help households fight the inflation that they are facing right now. Does the government of Alberta plan any measures to do the same on a consumer level?
Sure. Well, and there's no doubt that we are in a more of an inflation environment than we've been in for many years. And I would suggest as a result of federal monetary policy and federal fiscal policy, along with the fact that there's been a real disruption in supply chains at the same time. And I would say this, again, our focus, now we're monitoring this for sure in every sector, but our focus is really about expanding opportunities for Albertans, ensuring that Albertans have an opportunity to get a great job. We're seeing, exponentially more job opportunities in this province today than we were months ago, and we're seeing wages start to move up as well. And I really believe that will be important as we do see some inflationary pressures on the consumer side.
Okay, thank you. Next question.
Graham Thompson, iPolitics. Minister, some good news here. A lot of uncertainty, as you pointed out. An issue that was raised by the Premier a lot earlier last year, I haven't heard much about, is the fiscal reckoning. Are we still looking at a fiscal reckoning in the future for Albertans?
Look, Graham, we've been clear in our fiscal plan, really, from our first fiscal plan, budget 2019 on, and that was we were going to thoughtfully and carefully bring the cost of delivering government services in line with other provinces. That we weren't going to take the Ralph Klein approach with 20% cuts across the board. We were going to do it carefully, more surgically. And that continues to be our plan. And the good news is, and I'll have more to say about this in Budget 2022, but the good news is we're getting there. And so that was really job number one, to do that carefully and thoughtfully. We're by the next fiscal year, by 22-23, if we can continue to hold the line on spending, we will start to arrive at that metric of basically aligning with other provinces. We think that's critically important, and at the same time positioning the province for increased investment attraction and growth in our fiscal capacity.
But the term fiscal reckoning was used by the Premier repeatedly. Is that something that's no longer in your vocabulary? It seems you're not mentioning it again, but fiscal reckoning sounds very ominous. that a hammer is going to drop at some point. Is that no longer the case?
Well, again, we've been on this fiscal plan for the last really almost 3 years now, and I don't want to diminish the challenge. The challenge is significant, and every year that we're basically holding the line on spending, there's increasing pressures, as we all know. So I don't want to diminish the challenge, but I want to thank Albertans broadly for working with us as we work together to deliver government services more efficiently. Alberta can no longer afford to be an outlier. And again, the good news is by next year, if we stay disciplined, we will start to align with other provinces. An important step in the process of getting this province on a sustainable fiscal trajectory.
Thank you. Next question.
Hi, Janet French from the CBC. Just a question about the corporate tax revenue. So yes, you've got more revenue coming in this year than you forecast, but it's still on track to be roughly $4.1 billion by 23-24, according to your numbers. That is exactly where you were in 2019-2020, before you cut the corporate tax rate. So what have you actually achieved over that 4-year span, other than losing a lot of revenue?
Yeah, so that's a great question. Because I would say the good news is that within a few short years, we're planning to recover all the revenue that we collected when our corporate tax rate was 12%. We'll collect that same amount of revenue at 8%. But here's the big gain. The big gain is that our corporate tax rate and tax structure is a key ingredient in a very competitive business environment. That business environment, competitive business environment, is attracting investment by the billions these days into the province. And that increased investment is creating job opportunities for Albertans. It will raise wages and salaries across the province and result in significantly expanded fiscal capacity broadly for the province. So the good news is very quickly we recover any reduction in corporate tax revenues. At the same time, we get all the benefits of an expanded fiscal capacity and expanded job opportunities for Albertans.
Just to follow up about negotiations with the public sector. So, the government changed its position with respect to the United Nurses of Alberta. And I mean, you're potentially, if you look at what's happening in other provinces and the agreements that have come so far, there may be some arbitrated, deals imposed on your government. How does that affect your bottom line, and what flexibility is built into your numbers to accommodate some of those not initially planned expenses on labor?
Well, look, firstly, I do want to say that, again, I have great appreciation for the public service, great appreciation for our front line healthcare workers over the last months and even years now for their great contribution. And I'm hopeful and optimistic that we can land on a mutually beneficial settlement, a settlement that ensures that the Alberta Public Service, including healthcare workers, are paid fairly, are paid well, but also a settlement that respects our fiscal realities and the taxpayers of this province. So in terms of the budget, again, we had included, within our budget and fiscal plan, a labor market outcome. And as you know, our labor expense is a function of price times volume, and I'm confident that we can manage going forward. Obviously, stay tuned for Budget 2022. There may need to be slight adjustments, realistically, depending on where our labor mandate lands. But again, these negotiations were built into our fiscal plan broadly.
Thank you. We are now going to go to the phone. Operator, can you please put through the first question?
Emma Greeny, Globe and Mail.
Yeah, g'day, Minister. Thanks for taking my questions. I'm just curious here, how are the budget numbers going to be affected by the 5 oil sands projects hitting post-payout status this fiscal year instead of the one that was expected?
Sure, great question. And there's a significant part or reason for the increase in our non-renewable resource revenue projections for the current year is in fact that, as you point out, we've had 5 oil sands projects reach post-payout. And one positive is that once a project reaches post-payout, it can never go back. And so that does provide some additional certainty and predictability in our non-renewable resource revenues. And so it's having a material impact on our non-renewable resource revenues this year, and it will certainly into the future as well.
Can you give me any additional numbers or what you're expecting there, just as a follow-up? But also, when you're talking about oil sands projects, given the uncertainty, given climate concerns, do you foresee any new major oil sand projects actually being developed in the next decade?
Well, thanks for that. With respect to the first part of your question, I mean, right now we're projecting an increase over budget in oil sands non-renewable resource revenues of over $6 billion. So again, that will factor in the increase in price, the increase in production, but also include the increased revenues as a result of those 5 projects moving from pre to post payout. And with respect to your second question around additional oil sands development, I would say this, Emma, we should be adding another project or two in the province. We have an incredible resource here. We have the most responsible energy producers in the world from an ESG standpoint. We have our major oil sands producers are all moving forward with their Pathways project, a project that will ultimately leave them at net zero carbon emissions by 2050. Key piece of that is carbon capture and storage. But I can't predict, their intentions around major expansion. I do expect that we will continue to see some production expansion from our existing players. But I can say this, the world needs more responsibly produced energy from Alberta.
Thank you. Operator, can you please put through the next question?
Thank you. Rick Bell, Calgary Sun.
Good morning, Minister. The headlines for some people might read, strong economic recovery, and you've provided lots of numbers to back up that statement. But my question is sort of more down at the grocery store level and at the gas pump level. When are we going to start feeling it? You've talked about jobs, the people getting jobs. I'm talking about the people who have jobs now. When are they going to start feeling better, feeling the economic recovery? The bills are going up, gas is going up, groceries going through the roof, power bills up, insurance premiums up, in some cases property tax bills up, and nobody I know, and I may add myself in this lineup, is getting a pay raise. So the numbers may show that, but the people I know are paying more for the same. They're getting paid less if you factor in inflation, and yet they're going to read a headline that says economic recovery. So when does the economic recovery kick in for those people, working Albertans today, who are actually feeling more economic pressure today than in the past?
Sure. Well, thanks for that, Rick. Firstly, I'll say this. We are keeping taxes low in this province. So there will not be additional tax pressure for Albertans going forward. But they are experiencing some increased costs as a result of inflationary pressures. And I traveled the province later in the summer, and visited with a lot of folks, a lot of businesses, a lot of Albertans. And what I found across geographies and across sectors, there were in many cases a labor shortage, whether it was restaurants in Calgary, manufacturers in Red Deer, beef processors in Brooks or High River for sure, energy service companies in the Northwest and Northeast. Employers, the common denominator was that employers were looking for employees. And that tells me that we're going to start to see some upward pressure in wages. And I think in the energy industry, I can say that we're starting to see that right now. That's been a sector that took a really significant hit in wages over the last 5 years, really from about 2015, 2016 on. And we're starting to see some upward pressure in wages. And I think we're going to start to see that a little bit across sectors. So Again, I really believe it's government's responsibility to ensure that we have a very, very competitive business environment, to see investment come into this province. We're starting to see that in significant quantities. That will lead to additional opportunities for Albertans, both from a job standpoint, as well as those Albertans who own a small business and are looking for opportunities, whether that's, in the restaurant business, or whether that's in an oilfield service company, or perhaps in retail. Again, we know additional investment into the province leads to increased opportunities for small business owners.
Operator, can you please put through the next question?
Oh, do I get a supplementary?
Sorry, Rick, go ahead.
Let's just assume for the moment that you are correct, and I'm always a skeptic about everything, so don't take that personally. But let's say people, including me personally, start feeling my economic life is getting better. If that becomes the case, do you think, as I believe the Premier does, that the government, this is a political question, that the provincial government will start regaining some of its, let's call it, lost popularity as the economy gets better? In other words, will you become more electable if the economy gets better, in your opinion, as the Premier talked to us about that at the end of the UCP convention?
Well, Rick, I'm going to answer this in an economically substantive way and not a political way. But we did, as you know, during the last campaign, we made a commitment to Albertans around jobs, the economy, and pipelines. And we are working hard to deliver on that commitment to Albertans. And I'm really pleased today to stand before Albertans and say, on all of those metrics, certainly on the jobs front, we've seen a recovery of 103,000 jobs in this last year. And with the increased investment coming into this province, I'm very expectant that we will see additional job opportunities for Albertans going forward. On the pipeline front, I talked about in my comments earlier, what we're seeing with pipelines. Enbridge Line 3 is now complete. The Trans Mountain pipeline expansion is going forward, is actually on track from a schedule standpoint. Within Coastal GasLink is moving forward. Within the province, the Nova Gas transmission line, the Keyera liquids line, the Pembina Peace pipeline, they're all going forward. Those are really important pipelines within the province that will debottleneck the gas and liquids sector. So again, on that front, we've been making great progress. And on the economy generally, again, I think this fiscal update depicts an economy that's improving. We're leading the nation, according to most banks and think tanks, and not only this year but next year. And we're seeing growth broadly, not just in energy, but we're seeing a strengthening agriculture and forestry sector. We're seeing a booming tech sector in this province, hitting record levels of venture capital year after year over the last few years. Again, the Amazon investment is massive, $4 billion investment into web services here in the province. Financial services are growing. RBC is moving a tech hub here into the province, into Calgary, an additional 300 jobs, and that's just one example. We're seeing great optimism, although the tourism industry is struggling now, very admittedly, as a result of the travel restrictions broadly. I believe there's great potential there. Aerospace, aviation, we're seeing a real investment in the province. The recovery is coming broadly. Our economy is diversifying, and we're working hard to deliver on our commitment to Albertans.
Sorry about that, Rick. Can we now go to the next question?
Catherine Grakowski, Alberta Today.
Thanks for taking my question, Minister. You'd mentioned that you want to set that target and time frame for balancing the budget once you have a clear picture of the long-term global impacts of the pandemic. But that could take, years. So what clarity are you seeking before you set that time frame?
Sure, and you're absolutely right. What we know today is that we have an ongoing environment of uncertainty and revenue volatility. What I would suggest is, two things. We will continue to allow our fiscal anchors to inform our fiscal decisions during this time of uncertainty. And in other words, we're going to ensure we maintain a strong balance sheet as measured by our debt to GDP ratio. we will bring our expenditures, cost of delivering government services, in line with other provinces. I believe we can get there by next year. And as we get further along, as we begin to get past the pandemic, or at least get to where we recognize we're at a new normal, at that point in time, I believe we'll have the clarity to, again, define a timeline and path to balance. Balancing the budget remains very important to this government.
Catherine, do you have a follow-up?
Yeah, on a different topic, on the labor negotiations, you mentioned you're not going to cut as deep as the Klein era, but you also want to bring spending in line with the comparator provinces. But one of the reasons there were so many incentives and higher pay in, say, nurses is because these cuts drove them away. So I'm wondering, how do you expect to hold the line on spending while keeping people in the province?
Well, again, I'm confident and hopeful that that we can land on a settlement broadly in our effort, in our labor negotiation effort, that will pay our public sector employees in this province very well relative to other provinces, and yet again land at an outcome that respects Alberta taxpayers and is consistent with our fiscal realities. And so. Again, we're taking a different approach. We're looking to carefully and thoughtfully bring our spending down over 4 years, and we're well on the path of getting that job done. And that's the approach we've taken, as opposed to 20% cuts right off the bat, 5% cuts across the board in the public sector. We're taking what I would call a more surgical, a careful, thoughtful approach. It's taking us an extra couple of years to do it. But the good news is we're almost there.
Thank you. Operator, can you please put through the next caller?
Billy Kreiderman, Globe and Mail.
Hi there. In the detail, or in some of the write-up or around the fiscal update, you talk about oil sands producers not putting money into capital, but on spending on ESG. What makes you confident that they'll spend their money on ESG measures as opposed to something else?
Well, firstly, I would say their track record. We have an energy industry in this province that have made very significant investments in reducing carbon emissions, and so they've got a very strong track record. Emissions have dropped very, very significantly in the last decade in the Alberta energy industry, and so that gives me confidence that they will continue to make those investments. And again, as you know, our major oil sands producers have identified a Pathways project, a project that will get them to net zero by 2050. That will require a significant capital investment. And again, based on what we've seen historically, I'm confident that there will be those kinds of investments made.
Kelly, do you have a follow-up?
No, thank you.
Thank you. We can go back to the room for a couple more questions.
Hi there, Janet French from the CBC back again. We're probably going to hear right away from the opposition. They've already showed their hand on this one, that they're going to raise the issues of inflation, affordability, and we've already heard from some of members of your cabinet that they don't want to intervene with the market at all in that way. So I guess when it comes to all these price increases, fees, higher costs, is there any area in which this government is willing to intervene to make things more affordable for Albertans? And if so, where and why?
Well, again, in terms of inflation, that's an issue really for the federal government largely with respect to their monetary policy and fiscal policy. And again, obviously exacerbated by disruption in supply chain. I will say this, I believe government can have the most impact by ensuring we have a business environment that encourages competition. Competition, I believe, will ensure that products and services are offered in the most competitive and cost-effective manner, and that will benefit all Alberta consumers. I think, as you know, with respect to automobile insurance, that's been an issue that has, we see high insurance costs across the board, but over the last number of years, we've seen pressure in automobile insurance. We brought in Bill 41. And that really wasn't an interventionist move, but that was a move where we could clarify, provide more clarity in terms of the definition of a minor injury, and along with a number of other adjustments that will in fact improve health care options for Albertans that are injured in traffic accidents. Those measures broadly are expected to bring down the cost of insurance premiums for Alberta motorists, and we're seeing that. In fact, I know of a couple of major insurers in the province who are planning on reducing their automobile insurance premiums by a couple of %. So again, what we're looking to do is reduce red tape, reduce regulatory burden, ensure that we're creating an environment where that can be most competitive. And at the end of the day, we believe that will serve Alberta consumers well, and it will serve them sustainably in the long term.
Thanks for reminding me that right before the pandemic, you released this absolutely enormous auto insurance report, right, from that panel that spent all that time studying it. There were, I can't remember how many recommendations, like 90 or something, a huge number of recommendations. At the time, there was a bill. You acted on a few of them and said the rest will have further study. And some of the recommendations were things like, yeah, we should mandate winter tires in Alberta. So where are you in assessing those recommendations, and when can we see further action that results from that report?
Sure. Well, we did, as you point out, we did include a number of those recommendations in Bill 41 in our greater regulatory effort around modernizing our insurance regulations. So we did adopt a number of those recommendations. Their keynote recommendation was to move to a no-fault insurance program system. And what we plan to do is to evaluate what our adjustments in Bill 41 would accomplish in terms of premium rate relief. And so we're still evaluating that. I think early days. I'm encouraged with what I'm seeing out there. And so that's where we are with the recommendations. The panel provided really great advice, provided a number of options for the government, for Albertans broadly. We've taken their advice on a number of issues. And again, we're monitoring what's going on in the marketplace.
Well, what's the timeline, though, for deciding on no-fault insurance?
Well, again, we're monitoring the effect Bill 41 and the related regulatory changes will have on automobile insurance premiums. As I've noted, Janet, I'm encouraged with what I'm seeing early on. And again, if it should become very apparent that more needs to be done in the longer term, we don't have a set time frame. We have this report, which I think is a very valuable report for the government and Albertans broadly.
I'm just going to take 2 more questions from the room, and then I'm going to ask everyone else if they wouldn't mind following up with me via email.
Okay, Graham Thompson again, iPolitics. So looking ahead to next year, or possibly later, the idea, there was a task force on spending. Now you got a task force maybe on revenue. Will that happen before the next election? Like, what's the timing going to be on that?
Graham, yes. That would be my desire, is to launch the panel before the next election. I think there's a sequencing here. Number one job was to carefully and thoughtfully bring our spending down on a per capita basis. We're getting there. By next year, we think, again, if we can stay disciplined, hold the line, we're going to get there. Of course, part and parcel of that effort was to do all we could to expand our fiscal and economic capacity, and very encouraged with what we're seeing there. Kind of the third step was to appoint a revenue panel, again, to review our revenue structure, determine that, the efficiency and appropriateness of that structure. My expectation, my hope would be that we're going to get to a point here in this term where we can actually appoint a panel. But we don't have a definitive timeline. Again, as we see today in energy markets, there's significant uncertainty, volatility, and so we're going to get past the point where we are today, and we will be looking to appoint a panel.
Quick follow-up. I have to raise this point. Provincial sales tax. At one time, the government was against it, and then you kind of waffled on that last year, saying wait and see, let this panel be formed. Provincial sales tax, is that definitely something you say no to forever? Or is it something the government may be open to in the future?
Look, at this point in time, as we're positioning the province for economic recovery, we're not going to a sales tax or any new tax at this point in time. But in terms of a revenue panel, I think that realistically, Graham, we should give a revenue panel a blank sheet of paper and say, look, and given the the economic makeup and structure in the Alberta economy, what would be the most appropriate and efficient tax structure, revenue structure for the province? So I won't take anything off the table for a revenue panel, But to answer your first question, are we planning to implement a sales tax? The answer is no.
Thank you. With that, we're going to wrap up.
Just one question, actually. Has the government of Alberta made any economic analysis of the impact of a increased childcare system that is cheaper also on the participation of women in the workforce and the potential revenue this could generate?
Well, labor rate participation is incredibly important, and we're doing all we can to increase that participation. Affordable, accessible childcare is a key ingredient. So, again, I was very encouraged that our Minister of Children's Services was able to negotiate a good deal that respects Albertans' unique realities around childcare with the federal government, and we know that again, affordable, accessible childcare will be important in our recovery and ensuring an increased participation rate, especially by parents and particularly women.
Phone is working. Have you done or will you do such an economic analysis?
I don't have analysis that would with specific metrics, but again, just can confirm the importance of affordable and accessible childcare to increase our labor participation rate, particularly for parents and particularly for women.
Thank you. We're going to wrap up for today.